everybody. It's Chris here from Serene Education with the 4 major sentence update for the 4th of June 2013. Hope you had a great day yesterday. A bit of movement, which was great to see after last week. A lot of our students made some serious money yesterday, which is great to see. Well done, guys. Keep it up. It's fantastic to see that the template's finally working for you guys and you are getting the hang of it. It takes time, but as I mentioned, as long as you stick to the rules, you shall be profitable. Well done. Pat yourselves on the back, and let's see if we can make some more today. So let's have a look at the 4 majors, starting with the euro against US dollar. Looking or using our indicator FX8 Ultimate Indicator template, which is on the right hand side here, and we're going to start with the euro against US dollar. So nice bullish upside movement yesterday, actually finding a bit of support on that 20 February retracement area from the current highs in January to the lows here in March. You can see the 20.6 price support and resistance level. And last week we saw that bullish engulfing candle on a very strong support, a full week of support, price not wanting to go any lower, MACD indicating that, and the RMO crossing over to the midline. And we had a nice bullish engulfing candle, tweezer bottom on a previous sell here, and we looked to the upside. Nice 2 days of movement to the up to the institution moving average, breaking this 23.60, very, very important, but heading into the institution moving average and falling back. So breakout, pullback, and then consolidating, and then yesterday's candle reattempting that high and back above or back into the institution moving average. Ideally now what we would like to see is the institution moving average being below price. If there's to be positiveness, then we want to see the price trading above that area. It's trading above the 20 and the 50 at the moment, and you can see that the indicator box is pretty much blue. However, you can see the intraday negativity on our 5, 15, and 30 minute starting to come through. As we head into this institution moving average. You can see quite clearly on the Asian session, price pullback. Also on the US session last night, as we traded through it, we saw consolidation pullback towards the institution moving average. It's now important that we actually see price trading above it going into the end of this week. Non-farm payroll this week, so a lot of news coming out Thursday and Friday, in particular leading up to non-farm payroll. It'll be interesting to see if the US data is any better compared to what happened last week with the Fed announcing tapering of QE3 plan. If it is not good for the US dollar, then we're going to see the euro really pick up some steam and head into this all-important high here towards the 38.2. You can see I've got my monthly 38.2 February retracement and my weekly 38.2 all coming together in and around this area, and you can quite clearly see a very strong support and resistance level on the top here. We had 3 occasions where price attempted to break higher but failed to. So very, very important. We're going to go into this area where we're going to see a lot of consolidation, and we have to be aware of that. 4-hour chart, you can see swing highs, which is important. That support level, as I mentioned, and then most importantly, the swing high, swing high, indicating that price wants to go higher. RMO is well above the 0 line, and MACD is. However, as you can see, as we head into this area, the top here, you can see the MACD levels are starting to drop, indicating slowdown as we head higher. Okay, as price moves up or down, eventually what happens is that momentum or sentiment's going to start to wane, as people take more profit off the table as we head into major support and resistance levels. And clearly above us now is this all important 38.2 February retracement, but we've got the 2 of them working together quite closely here in a band, and you can see quite clearly, as I mentioned on the daily, we were trading to that bandwidth, and price wasn't able to actually really make any safe ground once we traded into it. So here again, same thing. You can see on the 4-hour, the last 16 hours in particular, we're seeing a pullback. If the pullback now stays above the current prior support and resistance level, here we go, this level here at 13.0436, look to see a 4-hour candle now building momentum over here. A nice hammer, bullish engulfing candle of some sort for the first part of this session, the morning session on the European market. If you get a nice bullish engulfing candle here, a hammer of some sort, a bullish orami, that would indicate now that we've had a nice breakout yesterday, the pullback, and then a continuation up into these areas at the top over here. So be patient, wait for the confirmation signal now on the 4-hour in particular, or the hourly. Let's go to the hourly. You can see moving into this area here, and what we want to see now is a slowdown, a consolidation, because prior resistance becomes a new support. So in this area around here, we want to see a nice bullish engulfing candle. Wait for that to occur. Once we get it, look to see if we get the indicators, i.e. the blue arrow. Candles are still blue. We just want to see the setup here on our 5, 15, and 30 minutes start to go blue across the board, and R squared to complement that buying sentiment, and then we should be looking long. Back up towards the prior 38.2 is our first target, which where price is trading right now to that level, you're looking at a good 58 pips. And then if it can get any higher, then we could be looking at the ultimate fib retracement is a good 100 pips away. So there's more than the tank here to make your profit. Just be patient, wait for the pullback, consolidation, a nice bullish engulfing candle here, and then target the upside. If we don't get to see any of that and breaks lower, then we should be looking potentially back towards the 23.6 Fib retracement level before. And from where the support and resistance level is to this level here, which is back towards the institution, you're looking at 72 pips to the downside. So there's more than enough today, guys. Just got to be patient. Wait to see if there's anything out there that's going to factor in the market this morning. We have the Spanish unemployment change figures this morning at 8 a.m. GMT. And then this afternoon we have trade balance figures, which could potentially tip it in our favor. So just be aware of those time frames. US dollar Swiss franc. Oh, sorry, apologies. This is sterling. Coffee hasn't kicked in yet. Sterling, okay, good old cable. Here again, you can see as the same with the euro against US dollar, we saw support being forged near term last week, and the bias being upside favoritism as we saw this bullish engulfing candle or tweezer bottom on this support area here. Price wanting to go higher, breaking above the 23.6 fib retracement from the weekly highs to the low here currently, and then the past couple of days price finding support here, and then yesterday candle moving higher, bullish engulfing, moving up above the 22.6 on our monthly. Great. So as long as that maintains, we had some great figures yesterday on sterling, PMI. If we can find price spending more time above the 22.6 here at this level, which constitutes to the 15,296, or get above the 15,300, ultimately our first target should be here, the 38.2, which is a good 100 pips away. Get above that, then you're looking at another 180 pips to the prior high, which will bring us back towards the institution. So look for the buying sentiment. MACD is clearly above the zero line here. RMO is still not. Okay, and it's imperative the longer we spend above the institution, this fib retracement here, because this red line over here constitutes that major support and resistance level that went way back to 2010, a very, very strong support and resistance level. So it's important if prices to be looking bullish near term, then we need to see price maintaining above 15,300. Building on here, so nice bullish engulfing, harami, or any of those indications, a nice hammer of some sort, and then get the confirmation signal, and then we should be trading back up towards the institution. So there's enough on the plate here to see further upside, but we want to see confirm support on this level. So ideally a 4-hour candle close above there would be fantastic. A nice bullish engulfing 4-hour candle would be fantastic. You can see the indicator box here, not a lot of blue, okay, and it's not all really in any sense. We'd like to ideally see all this being positive, but you can see as we see a consolidation pullback on the Asian session, that is complementing all this negativity intraday. So if we drop to our 4-hour time frame, just move this over so you guys can see it. There we go. The institution has been tackled on our 4-hour. We are seeing swing highs, which is important for an uptrend. Swing high. Both at 20 and 50 are below price and crossed over. MACD is very much above the zero line. Yes, it's consolidating as price is moving higher. MACD has dropped slightly. That's bound to happen, but as long as it maintains above the zero line, RMO is one we want to see now making higher highs. Okay, these histograms need to be making higher highs. You can quite clearly see we've had a consolidation, and the RMO histogram has dropped slightly. As long as it maintains above the zero line, we want to see a bullish engulfing candle now. So rather wait for the close of this candle this morning, because that'll be the deciding factor. If it's bearish engulfing, then we should be targeting back towards price support and resistance level lows. If it's bullish engulfing, then we should be looking for the top side to be our first target of the day. US dollar Swiss franc, good old Swissy. Here, a lot of negativity on the US dollar, primarily because of all those the news coming out that there's a good chance that the Fed might be starting to taper its quantitative easing, a QE3 purchasing plan, and we saw the US dollar falling at a major hurdle here in the 23.6 fib retracement on our monthly on this particular chart. A lot of tweezer tops here at this level, price breaking above but not being able to actually hold on to those areas of support, and price really falling with a bit of momentum to the downside over the past week or so. The intraday, or you can see the indicator box here, very all over the place, and a lot of buying sentiment intraday as price finds a bit of support here on the 50 period moving average. You can notice that the MACD is very well below the zero line. RMO is still above the zero line, so we're still very much in an uptrend. However, price is starting to wane now. If I take the current low and move it up, you can see swing high. We are looking towards this area over here, but you can see quite clearly the price support and resistance level here at 95515 and change has been breached, and the more likely that we're going to see further easing or tapering of the QE3 plan, then it's more likely for the US dollar to see more negativity as people start taking more and more profit. And it'll be interesting to see, because we're going to be going into non-farm payroll this week. It's the first Friday of a new month, and we are going to see the figures for non-farm payroll. So there's a lot of news leading up to that event, and if they do come out unfavorable, then we're going to see further negativity of the US dollar, and we're going to see all its cross pairs gaining a bit more sentiment over the next couple of weeks. So here, trading below this level over here, which is negative, the candles are still blue and the last arrow was red, so it's just telling us heads up, we're still very much in an uptrend. Ideally, if you break this consolidation low over here, the major swing over here at 9303, then we're very much looking for negativity for the long term. 23, then we should be looking down here towards the 38.2 level, which is a good, if I take it from this level down to this level here, you're looking at 400 odd pips. So intraday, you can still make money to the downside, don't get me wrong. However, because it's still positive, we don't want to be trading against market sentiment. You can see bearish engulfing candle the last 16 hours or so pulling back. As long as that pullback fails now at this support and resistance level here, then what we should be looking for ultimately is a bearish engulfing candle, a shooting star, bearish Arami of some sort, and then we should be targeting back to the downside towards that all important 23.6 is our first target, which would be roughly 229 pips to the downside. So be patient. Here again, we want to see a bearish engulfing candle. We don't want to be selling as price pulls back. We want to see a confirmation from the market. Once we get a confirmation on our 4-hour candle, then proceed to look to the downside. Last pair of the day, the US dollar Japanese yen. Here, as the same as the US dollar Swiss franc, we're seeing the US dollar losing a bit of ground recently. Here, trading above the 50 period fib retracement on the monthly time frame for this particular chart. A lot of resistance through most of April, and then we had the breakout here going into May. Then we saw price rallying, however not making higher highs recently through mid-May, and the negativity coming through last week in particular with the news with the Fed. And this has seen the US dollar falling, but falling back into a price support and resistance level here in the shape of the prior support and the 50% fib retracement from our monthly time frames. You can see the close of yesterday's candle through most of the day. We saw a lot of selling. However, close on the US session, we saw price pulling back towards this 50% line. You can see the candle on the Asian session very much positive as we see price consolidating now at this major support and resistance level. If it maintains above the 50% line, then it's more likely for price then to start building on that, and then we could see the US dollar making further attempts of these prior highs. What we want to see here, if this is really genuine negativity, is the daily candle to close lower than this 50% line. Once we get that, then ultimately we should be looking further to the downside, which our price support and resistance levels here at the 96.76 as our first target. If and when we break lower, and from the 50% line, 50% fib retracement to this particular level here, you're looking at 300 pips. So there's more than enough to the downside. But we've got to be patient, because we want, if this is to be genuine negativity long term, then we want to see a bearish engulfing candle close. If we don't get to see any of that, and we see price actually finding support above here as we go into this Friday, Thursday and Friday, that could mean that there's more bullish bias for the US dollar against the yen, and we could look for topside favoritism. So 4-hour candle, let's have a look and see that's happening. You can see it's trading below the institution for the first time in, let's have a look. The last time it was trading below the institution was back in April. So we're back below the institution yet again, this time the first part of June. So if this is genuinely been negativity, then we want to see the institution becoming that major resistance level. So here again, you need to be patient. You can see quite clearly price is pulling back. There's a bullish candle to the upside. We've got to see this level now. If you want on the 4-hour, you can see prior resistance support here. This needs to be the new resistance. So 138.6, draw a line there. Wait for the 4-hour candle to close. If it's trading lower than this, but trading as well as closing below the 50% line, then we should be looking for negativity to the downside. And if that's the case, target price support and resistance level lows here. So back to this level here is a good 90 odd pips, but ultimately back towards this major support and resistance level as I mentioned before. So here again, RMO below the zero line, MACD below the zero line, However, you can see a lot more buying sentiment on our intraday time frames, which concurs with the pullback we've seen over the last 16 hours or so. However, if this is to be genuine negativity long term, we want to see failure here at the 50% Fib retracement level at the 99.82. So we need to see price trading below that. As soon as we see that, the more likely is we're going to target those downsides going into this Friday. That's for today, guys. Short and sweet. Keep it simple. Look at the news to see if there's anything out there that's going to change the market sentiment for you. Back it up with sound money management. Very, very important to be trading with very, very good money management rules, especially in the volatility we're seeing in the market this recently. And just keep it simple. Okay, don't complicate things. If you are using this template, follow the rules. Gauge what's happening in the long term to see what is likely to happen intraday. If the intraday sentiment is biased, look to see what's doing that, how it's reflecting, and just trade accordingly. Back it up with sound money management, and you will be profitable. I guarantee you that. Have a fantastic trading day, and I'll see you tomorrow. Until then, you guys trade through.